All right, how's it going, everybody? Welcome back to another video. Today we're going to do a full trade breakdown of my execution today in Lemonade stock, ticker symbol LMND, which was a strong earnings gap up today, up over 34% on the day, and from the open to the close up about 15%. And with my entries, I was able to get a profit cushion of over 13.5%. And in this video, we're going to break everything down. My rationale for focusing on Lemonade, how it got on my radar, how I analyze the earnings report, my entries, and also my rationale, kind of play-by-play of the morning action, because with these earnings gaps, you do have to kind of be in front of the screens and be ready to act quickly. And I'll also, of course, talk about how I manage risk, my position sizing, and what my plan is with this position in the future. So we're going to break it all down. Hopefully you guys will find this valuable. If you do, go ahead and leave a like down below. And if you're interested in earnings gaps, I'm actually doing a free earnings gap webinar this weekend on Saturday. The link to sign up and register is down below in the description. Just fill out all your information here and you'll be registered to go. And you'll also receive a special earnings gap model book that also has intraday tactics as well as trading post gap range breakouts. This will be a fantastic resource, again 100% free, as well as the webinar. All you have to do is click the link in the description and register, and I look forward to seeing you guys over there. This will be a lot of fun. All right, so let's get into the trade breakdown here. First things first, Lemonade has been on my radar for quite some time. I watched and kind of waited as it was forming this consolidation here. You can see my markup here. We didn't get a range breakout opportunity. We broke down further, but then it was setting up before earnings, and this has been featured in the Trade Lab. I also think I actually mentioned it in the weekend video as one of the stocks I'm focusing on for earnings reactions that I posted this weekend. But nevertheless, we're forming a constructive base here right near 52-week highs. And if we go over to a weekly chart and zoom out, you can see that we had a strong IPO move, and then we pulled back and consolidated for quite some time, formed a stage 1 in terms of stage analysis, and then here we had a breakout into stage 2, and now we're just kind of forming a base on base within that stage 2 uptrend. So we're starting a longer term uptrend, but are still operating and coming from a longer term digestion contraction period. And from those periods can come very strong expansion that we want to profit from as traders. And this move here, let's actually go to a daily chart here. This move here is what really made me focus on Lemonade, because I love seeing stocks that can make fantastic moves in the past. Those are the ones that likely, when they're in trend, can make powerful moves once again. And from this earnings gap, if I go ahead and actually shift click the right way, this was up about 162% in just a matter of 20 days or so. So that's a pretty strong move, and that's hopefully what will happen with this one. We'll see what happens. I'll be happy if we do, but it's got that potential. That's really the key thing. I look back in the past of the stock and see, is it capable of making strong moves? And we've got one here as we went over. And then also during its IPO move, it had another nice run. So I always like to look back and see and look to the left and see, is a stock capable of making a strong move when it's trending? Because we don't just want a stock that can trend and make a few percent. We want to compound and get a lot of juice out of a potential uptrend. So I liked seeing that. That was kind of added to my conviction in the stock. And in addition to the technical conviction, I like seeing that we were reporting strong earnings. I use a very simple prompt. I'll link it down below, the exact wording I used. Basically break down the earnings report in terms of earnings growth, sales growth, margins, stock share buybacks, the key things that can drive a stock higher. And looking at the earnings report of LMND, the key things were margin expansion, new products. So that's always key. And then also, I believe, if I go ahead and check my notes, also a raising of guidance. So that was really key. So all positive things that really, again, reaffirmed, okay, focus on this stock. It could have a positive earnings reaction. And how it got on my radar in the first place I was screening the DV universe and saw it back in here. But if I didn't do that, what would be the process to get a stock that's gapping up and potentially can make a strong day one move on earnings? Well, you'd basically want to set up a dashboard just like this. I call this my pre-movers dashboard, which basically screens for pre-market movers and gap ups. And I like either sorting by the pre-market volume versus average and just see what stocks are moving on big volume, or I'll simply sort by pre-market percent change. And any stock in pre-market that's up big is a potential gapper. And then what you want to do is the logical next step, go ahead and check out, why is it gapping up? So if you didn't even have LMND on your radar, which I did, as most recent as this past weekend, you would look at this screen this morning, bring it up, and see that LMND is up 14%. And crucially, it's on big volume. And what I consider big volume in terms of pre-market volume versus average is over 10%. So there's not actually that many there. If we go ahead and sort by pre-market volume, there's only a handful of these, about 17 or so, and not all of them are considerable, I would consider trading. And LMND is on my radar in the past. So that's why I was focused on it. And basically what you'd want to do is go ahead and look at this list, see what's on big volume, but also gapping up strongly, and crucially gapping up on a strong catalyst. And that's where analyzing the earnings report comes in, and a quick prompt can help you do that and gain conviction that the stock, meaningfully might make a strong move. So that's how to get LMND on your radar, and that's where I spotted LMND this morning. All right, so once it's on your radar, it's all about trade execution, right? And with gappers, and let me actually bring up the stock. With gappers, there's kind of three main entries that I look for in terms of trading it an intraday day one move. And the day one move is the day of the gap for everybody who's wondering. So trading the day one, I want to enter very shortly off the open, get positioned close to that open, and then benefit from the strong expansion and trend that we see in the most powerful earnings gappers. So to enter close to the open, I have to find spots that are tight and logical, allow me to manage risk, and position myself for that trend. And often when a stock gaps up, there's a short-term consolidation, kind of like a short-term base after that gap. And in that base is basically a point to position yourself on a range breakout, a breakout from that base, a true intraday range breakout, or what I like to do is an anchored VWAP reclaim. Now, anchored VWAP is the volume weighted average price anchored to the start of the day. So let's actually go ahead and bring up the intraday base so I don't have to just keep describing it. But basically, often stocks gap up and then there's some sort of short-term consolidation, and then they take off and trend throughout the day, trend above that anchored VWAP the entire day. That's what the best ones do if you go ahead and study them. And some of them just take off and don't give you much time to join. Some of them have a little bit more of a basing process before they take off, but all of them kind of have that similar structure. And if you take a look at that model book, they kind of all share that similarity. So what I want to do as a trader is position myself within that IPO base at a tight logical spot where I can manage risk. Honestly, under 4% is ideal, especially intraday. The tighter, the better. And get positioned at a point where it's starting to reconfirm that expansion and move up from that first pullback and look like it's going to break out and begin that trend. So that's my goal as a trader. And like I said, there's kind of three main ways I like to do that. The first is a range breakout from that IPO base. So this would be the range breakout here. The next would be a true breakout through the high of that base. This happened a little bit later. That would have been an actual spot, but I was already positioned, so I didn't utilize that here. And then the third way, which is actually my preferred entry tactic, is their anchored VWAP reclaim. So again, the volume weighted average price anchored here. And this is used by a lot of execution algorithms for institutions, which is why it's very relevant, especially in earnings gappers where the true trend is created because institutions are, adjusting their models and saying, okay, we have to increase our position by X amount of shares. We have to build a whole new position in this name because it's changed how we're valuing it, and we have to, keep adding stock based on, our goals as an institution. So that is the anchored VWAP here. And I love when we have a dip and then we reclaim the anchored VWAP. The first one occurred right here where this first bar was a little bit tight. We pushed lower and then reclaimed it. As we reclaimed it, we also reclaimed that anchored VWAP. It also lines up with this high here. And then the second kind of key reclaim was here because we dipped back below it as we were forming that base. And then this is where we reclaim it another time. Then we oscillate down, reclaim it again here. So basically we're looking for a push higher from below through the anchored VWAP. So let's walk through the morning action bar by bar. First, we had the open, and this is a little bit of a weird bar. We didn't actually push much, during this first minute. The range here is about 2%. And, I should set the stage here. We're looking at a 1 minute chart. And this is the only time that I'm trading off of 1 minute charts is these earning gappers, because like I said, these can move very quickly. You have to manage risk tightly, and 1 minute charts help me do that. But as soon as I'm positioned, I'm getting off the 1 minute charts, getting up to a 5, 15, ideally 65, and ideally just watching the action on a daily chart. But I do use the 1 minute charts for execution for these type of names. So here we have the opening bar, didn't move much. Then we had a quick undercut and a very fast push higher. At this point, I had my order ready, but was actually a little bit late on my buy here, and was only able to buy in my Roth account about half of what I wanted my final position to be. So I bought about a 15% position here. And it was moving so quickly that I didn't have great execution here. I wanted to buy it as it reclaimed the anchored VWAP, which was down here. And then, at the latest through this high, but it pushed so hard that, I bought it right here. I think 69.33 was my executed price. And my risk for this one was about 3.4%. I was using the low of this bar. So of this first buy, I was using this low as the stop loss. And the rest of that is about 3.2 to 3.4%. Again, I have two accounts. I've got my Roth account. I've got my margin account. I trade them basically as exactly the same, but I placed a buy first in my Roth and then my margin account. And because it pushed so hard, I wasn't actually able to purchase it while managing risk tight enough in my margin account. So I just had to wait and look to purchase that later on the next setup. So it pushed hard from there, but then immediately started pulling back about 5 minutes into the session, undercut my price. So I was underwater at this point, but crucially, it stayed above my stop. And you just have to accept your loss. You have to accept that you're willing to give it to that space, because these can move and oscillate, and you don't want to get too precise on it. You of course want to manage risk, but you got to kind of give it back and give it that leeway back to your stop, especially, with these type of names. Anyway, we pulled back here, and then crucially, we had an upside reversal. And instead of pulling back, we started going tight. And look at this tight range on low volume. We've seen this characteristic on daily charts, and this is exactly what we're looking for when there's an equilibrium, that's reached between buyers and sellers. So we have a strong push up, we've got a strong gap up, the stock is under accumulation, and then we go quiet and tight. We're looking for expansion from this tightness. So at this point, right around this bar, I placed a buy stop right above this high for both my Roth account as well as my margin account to fill out the positions to over 25% position in each of those accounts. So it was about another half position in my Roth and then a full position in my margin account. And that was executed on this bar right here. We can see we pushed strongly from this range breakout. This would have been an earlier buy point, but it pushed very, very fast here, triggered my buy stop, and then almost immediately dip back below the anchored VWAP, and I was down for just 1 or 2 minutes here before it reclaimed and pushed higher. And crucially, my stop for these buys, I set it even before I entered the order. It was going to be this higher low. This would be my line in the sand. I was willing to let it dip below this tight range because I thought it might do that, just because it's so tight here on these intraday charts. So I was giving it to this level here. And that risk is about 2.8%, I believe, from that buy point here. We dip down, reclaim the anchored VWAP. This would be another entry if you're not already in. I had my full position set in both my Roth account and margin account, so I was set and good to go. At this point, I'm just watching and hoping a little bit that it pushes from my entry. And we started grinding higher above the anchored VWAP. That's still kind of pretty much flat. And what I wanted to see here is just expansion higher, break through this high, and the beginning of that strong trend like I talked about. We have a few other undercuts and rallies of the anchored VWAP as we go. None of them tested my stop. And I do want to mention I updated my stop on my Roth, both half positions to this low. So this was my stop for all the positions that I had. So let's go ahead and zoom out here. And as we go, if you have any questions, drop them down below in the comment section. Happy to answer anything. Honestly, I do want to mention here, 25% position in This, with the risk that I was taking, 2.8%, 3.4%, is probably a little bit big. And that's the reason being because 25% position times a 3% risk is about a 0.7% portfolio loss. That's a little bit higher than I'd like. I prefer to keep it around 0.5%. So a 20% position total in both my Roth and margin account would have been better here. I just wasn't able to get as tight enough entries as I typically am. So looking back, I probably should have done 20% entries instead of the 25% positions. So we're grinding higher, we're oscillating and basing below this level, and then we get the breakout, and then we actually begin to start trending. So let's go ahead over to a 5-minute chart and take a look at the action. So here were my entries on the 5-minute chart. You can see that tight range shows up on this time frame as a very tight inside bar. Makes sense. This was the breakout. This is where I put on most of my positions, and you can see the expansion that we saw and just the stair-step nature higher of the stock. And this is exactly what you hope to see. This is a sign of institutional accumulation, this type of pattern on an intraday chart, especially on an expansion day. And you can see we never really test the anchored VWAP again. We just kind of trend above it until about this time frame, with about 1 p.m. And at that point, we just kind of base constructively into the end of the session. Now this becomes the key level, the HVC, the high volume close. And then this is the high of the gap up day, also a key level that ideally we push through tomorrow and reconfirm and continue the expansion. But again, here are my entries. Here is the contraction at the beginning, and then the strong expansion that we're able to profit from. And from my cost basis, again, up about a little bit over 13.5%. I like the action overall. When we get expansion like that, sometimes we do see tests of the anchored VWAP. I want to see that hold intraday pretty close. Sometimes we get undercuts and reclaims, but overall, this is very strong action, and ideally we continue higher tomorrow. However, there are a lot of instances where we get a shake lower to the day one anchored VWAP right here. So I'm willing to give it back to that. And in fact, I'm willing to give it back all the way to my cost basis. My stop is now my cost basis. So this is basically a break-even trade at worst. And I've got plenty of cushion, and I'm looking to profit from a longer term trend that this could just be the start of. So I don't want to get shaken out prematurely. I fought hard to establish my position. I've got my cushion. Now my job is to sit and let the stock do its thing. If it takes me out, takes out my stop, that means the stock wasn't ready. But I've got enough cushion that I should be able to weather normal contractions and ideally profit from that stronger trend. So going over to a daily chart. Again, we have a strong close right near highs. This is exactly what you want to see on a daily bar. Ideally, tomorrow we see continued strong action, fall through higher through the HVC, through that high. We have a strong day 2, and then maybe form a contraction, rest a bit, and then reconfirm higher and just kind of stair step higher above the rising moving averages. However, with a strong bar like this, and this was a very big move, again, up about 34, 35%, it's within its rights to consolidate for a few days here and contract. And that would kind of be scenario B. Scenario A is immediate follow through, and that would be ideal. That would be great. But scenario B is completely possible. We contract, maybe we shake lower, close well, but I don't want to see it retest my costs. So ideally we contract, tightly here, and then reconfirm higher, and then stair step and trend. And then scenario C is what would lead to a stop out here if we completely reverse and take out my entry, and I would be out break even and either looking at the stock later on if it recovers and sets up again, or simply moving on to the next opportunity. But that's kind of the 3 scenarios I'm thinking about going forward: immediate follow through, contraction, and then reconfirmation, or a failure here. So those are the 3 possible scenarios at this point. I'm keeping my full position because again, looking back at the history of the stock, it can make these strong moves from earnings. And I don't want to get sold out prematurely. And my sell segment will basically be on weakness, 2 closes below the 21 EMA. And I'll feel a little bit more comfortable once that 21 EMA is above my cost basis. But I've got decent cushion, again, about 13.5% on my position. So that's a run through pretty much of the full thought process behind it. Again, when trading these gappers, it's really key to first of all, be able to get them on your radar. So be running screens that looks for strong gaps, both aftermarket and pre-market, because this again was on an earnings report before the market opened. So you have to kind of build that into your process that you're ready to analyze those stocks before the market open, see if the catalyst is worth it, see if it has all those characteristics that you're looking for, and then be ready to actually execute. And then again, to summarize the trade execution, I'm looking to position early in the session, in the first 20 minutes or so, using various entry tactics, whether it's a range breakout, anchor VWAP reclaim, opening range breakout, basically finding a spot and being a little bit creative so I can manage risk tightly and logically while getting positioned, looking to profit from that immediate expansion on day one, trending above the daily anchored VWAP. So that's kind of the whole process in a nutshell. Again, if you have any questions down below, happy to answer anything. And hopefully this trade works out, and you guys will see tomorrow if I get stopped out or not, or hopefully we continue higher. If you enjoyed this, again, highly recommend signing up for the 100% free webinar I'm doing on earnings gaps, not just day one entries, but also day two and beyond. There's a lot of great things you can do with post gap range breakouts. That's actually my preferred way to trade these earnings gappers, just because you can manage risk a little bit more tightly, and you kind of get the benefit of seeing the cards, not before they're played, but on the table. You've already seen the quality of the gap up at that point, and you've got a tight range that forms, and then you're buying from that tight range. But that's enough of that. I'll get into the details over on Saturday. So look forward to seeing you there. Again, the link to that is down below in the description, and is 100% free, and you'll also get that model book along with it. So thanks so much for watching. I hope you guys enjoyed. If you'd like to see more videos just like this, breaking down other types of trades, I could do a few on some range breakouts. Just let me know down below in the comment section, and I'll see you guys in future videos. Take care. Bye.